Investors and traders, welcome to the channel. Today is 8th of September 2024. I hope everyone is having a great day. We will be taking a look at the key US tech stocks in this video. As always, the video is for educational purposes only, and it's not a financial advice at all. You have to do your own work. So we will start by taking a look at the stock of Apple, but we'll also be covering NVDA, Tesla, then Microsoft, Amazon, Shopify, Roblox, many tech stocks that we take a look at. So here we go. So this is the weekly chart of Apple, and Apple came into this $200 per share region that we had been watching for ever since it had completed this ABCD pattern right here. And that's when on the 5th of August it formed a bottom as well, and then we have seen a really nice rally over the course of past 1 month. But we had also identified, this gray zone that we see. This is a gap actually. So we had identified that the market or the Apple stock is likely to move into it. It went pretty much halfway, and then the following week we have seen basically on a weekly closing basis a pretty big pullback in the stock. And the other important thing to note is it has also closed below the 78.6% retracement. So what this means is that this is a region of good resistance level. So the chances are we are likely to see a further pullback in the Apple stock, and the ABCD pattern which I've drawn in this line here, most likely this is what the stock is following, and we might be in a CD like lower, and we could see the stock come back to 192 to maybe even $190 per share level. So basically it'll be moving back into this trading range, forming this ABCD pattern, and this is where perhaps it might just end its correction. The stock remains pretty strong. One of the things about this Magnificent Seven, the MAGA stocks, is that I'm really bullish, or fairly bullish, or in my opinion the only kind of stocks to consider are really Apple, NVDA. Even NVDA is getting a little bit weaker now, and Meta. So these are the kind of three stocks I will be paying close attention to, only from bullish side of things. But what is happening is that a number of these stocks are actually becoming pretty good trading vehicles. So not necessarily longer term investors, but if you are a shorter term trader, swing trader, perhaps it will provide pretty good opportunities. So this is what we are looking at, $192 on the weekly chart. I've drawn this in this shaded region, and if we just move one level below in the time scale, just to see what sort of price action we see on the daily chart. So here we go. You can see this is the gap that I had drawn. It went right into it, pretty much 50%. It filled it by 50%, and then we have seen this pullback right here. And then last Friday's candle, it's a pretty bearish candle, took the lows of last Thursday out. So the chances are it's actually moving in that pattern that we have seen on the weekly chart for Apple. Now I'm moving back to the weekly chart, and we'll start by taking a look at NVIDIA. Here we go. This is the weekly chart of NVIDIA. Here I had this when the earnings were coming out, bullish scenario right here with the possibility of this reaching right here. I think I'm going to remove it for now, although we have not taken out point C, but there is a possibility we could actually take that out. So I think I'll just leave it for now. But if the point C is broken to the downside, then of course this pattern is totally invalidated. The chances are it already is, but for now I'm just going to leave it here on the weekly chart. And then let's take a look at this on the daily chart. So on the daily chart, we were really watching when the market was hitting this 61.8% retracement, and for a couple of days this market just hung around here, but last Friday it broke below that, so which indicates further weakness, and the chances are we are actually in this red ABCD, which could see the price move down to about $80 per share level. But we do have this trend line here, so this is something it needs to tackle along with the 78.6% retracement around $100 per share level, or a little bit below that. So 100 to anywhere between 97 to 100 is could be a potential some support level. But if we break this down, then we can actually accelerate to the downside pretty quickly. And this is where the ABCD will be completing around $80. But we do have this breakout around the 65. So I believe the really key will be around 76 and 77. Below this, it just opens up a lot further downside, even up to $50 to $60. But most likely, if this ABCD is correct and the market is moving in this, between 75 and 80 is where we are likely to find a pretty good bottom in NVDA, in my opinion. Of course, we'll have to wait and see what the price action will give us. Now let's take a look at the stock of Tesla. Here we go. This is the weekly chart. So on Tesla, here it went into this gap formation, and look at the number of weeks. It's just gone nowhere for a number of weeks now. And in my opinion, the stock is actually getting much weaker now, because you just take the retracement. This one was only able to retrace about 50% right at the 200-day moving average, and is closing below that on daily. On the weekly level. So this is 200-week moving average. So in my opinion, I think we are in this ABCD highlighted in red, which could see the stock move into this gray zone. So anywhere between 154 to 145 is the kind of range it is predicting. Now I'm still leaving this point as point C for this longer term ABCD. But the chances are we are in this ABCD, which could actually see the stock pull back a little bit further. And then if we break below this point C, then of course this ABCD is off the charts. And then we are looking at ABC to the downside, which is going to actually take us below this 2023 lows and will be pretty negative for Tesla. So let's see what the price action will bring for us. And on the daily chart, here we go. Let me actually... Yeah, here we go. So that's the pattern that we saw on the weekly chart. So on the 5th of August, we had formed this nice ABCD, and this proved to be a pretty good low for quite some time. And then the stock went back right into this gap formation again. So it has done a double top formation. Last Fridays, it was moving nicely, and it did appear that perhaps we have seen a pretty good low. But last Friday's price action, just look at this big negative bar closing on its lows. That shows a lot of selling pressure. And what it has done is it's closed right at to a potential support level as well. Because we have this brown colored ladle line here. We have this purple ladle line here. And then we have this trend line here as well. So there is a good amount of support around here. I think it's just, pretty much close to his 38.2 50% level. But if it breaks below these points, then I think we are actually moving in this CD like lower, and we could see anywhere between 160 to 145, basically filling this gap which was left from April 2024. So the market is likely to do that. So we have to really carefully watch next Monday and Tuesday. If we break below these levels, then I think we are in this CD like lower to close this gap right here. The stock has already closed a fair amount of gaps actually when it was just moving in gaps right here. That's, I believe, in one of the earning calls, Elon had mentioned that they're still on track for robotaxi, which has been moved forward now into the future, and then his plans to have cheaper Tesla cars. But in my opinion, I think that a lot of work needs to be done, and Elon Musk is involved in a lot of things with his X platform, SpaceX, many things. I don't know how much attention he's able to pay to Tesla now. And of course, he got his pay package approved as well. So yeah, I think we're gonna see a fair amount of selling pressure in really short term in Tesla, and then really keep on watching this level next Monday and Tuesday, what the price is likely to do. Now let's take a look at Microsoft. Let's take a look at Google actually first. Alright, so I'm going to move to the weekly chart for Google. There we go. So Google completed its big ABCD, it went right to 1.618 expansion of this 2022 bear market, and in my opinion it has completed its pattern formation, and it's a pretty bearish looking chart now. Look last week how bearish it closed, but it's right into this structural support as well. In fact, this was our target because it's also 38.2% retracement around 150-152 mark, and then structural support. So we should be able to see some sort of a bounce there. However, if that bounce, if it doesn't bounce, it closes below, that is really bearish. Or if it indeed bounce from here, then we could actually look at basically a 38.2% to 50%. That's gonna be the region where, you know, most likely sellers will be waiting right here in this formation, about 167 to about 172 dollars per share level. That's gonna be, I think, the kind of rally we can see. And then you know, I think what's happening is we are in a bearish symmetry pattern. So here, if we're gonna see we could see the entire repeat of the entire 2022 bear market in this stock, which could actually bring it a lot further down to about 125. And if we were to just take a retracement, that's most likely going to be a 61.8% retracement. We'll also have support coming in from this trend line. So it looks like this is where the stock wants to go, about 125 bucks. So another 25 bucks lower. So just keep on watching this. But yeah, there's a lot of we had been warning about this one for quite some time actually, as it was hitting our pattern formations right here. Now let's take a look at Microsoft. Weekly chart of Microsoft. Microsoft also completed its big ABCD in black. Then the purple one was also completed pretty much to the dot. And now what we are seeing is basically the market retracing. 5th of August low, that's where it sort of formed a double bottom, but it looks like it's gonna be taken out to the downside because the market just retraced about 50%, and then it's just, you know, there are just no buyers above there. And last Friday it took out the lows of basically the past 3 weeks. So it's a bearish price action. Looks like what the market is doing, it's moving in an ABCD, and we can see the market pull back right into about 345. 350 345 dollars per share level. Then the key will be 370 because that's this 38.2% retracement of this entire move from November of 2022, excuse me, October of 2022 to the highs which came in on the 1st of July 2024. And if the market is not able to hold this, the chances are it will not be able to. Then of course, you know, we'll have a 50% retracement of this entire leg higher, with the possibility of even the market pulling back further. The kind of thing that we have seen with the Google stocks, so the Microsoft could actually pull back by this 2022 bear market. Here we go, and that will actually be very close to about 50% of its entire rise from October 2022, and also we'll have this ABCD pattern completing. So that will be an area of a pretty good support level to be looked at Microsoft. So for now, I think not much to do, at least on the weekly charts for this one from the bullish side, in my opinion. And you do what you have to do. Okay, now let's take a look at the stock of Amazon. Do you excuse me if my voice is coming a little bit husky, because I do have a little bit of a cold. So that's actually showing up. Here we go. So Amazon also completed this big ABCD. Now, one of the things about Amazon is got a tech side where it has the cloud, Amazon Web Services, which is of course been very profitable, but it's also been losing share to rivals such as Microsoft. So Microsoft Azure, which is their cloud solution, is actually been doing pretty good, and then Google has its own, and then there are several other smaller players inside the cloud infrastructure. So Amazon is basically no longer a leader in the sense that once they had like a 7-year run where there was just no serious competitor, but you know, they are losing their edge now, so there is for sure more competition coming in. And also on the retail side, which has been traditionally a lower margin business for Amazon, because Amazon had been selling products as a first party at very low margins. They have been making money through the third party sellers, but with the slowdown in the economy and consumer confidence being low, what is happening is I believe it will begin to show up in the Amazon's share price. So it went right into, after completing this pattern, just a sharp move lower right into this trend line, and breaking below this trend line is obviously it's not going to be good for the stock. But the chances are, where we are now, we are actually at a potential point C. So I'll be looking at something like this, and here we go. So that is our potential point C, unless this point C is taken to the upside, and there is a chance, because Amazon stock traditionally has been pretty strong, we could actually go up a little bit, test the highs of this 29th of July weekly candle right at the 78.6% retracement. And if that were to happen, we'll have to just move it like this. But in my opinion, we are moving lower in Amazon, but we could also see a fair amount of a back and forth sideways trading range kind of a behavior, and the key will be this trend line. If it breaks below, then we'll have a sharper move lower to the downside. Now, one of the things that we have seen in Microsoft and also Google is the entire 2022 bear market. Amazon stock is a little bit different, because what this stock really likes to do is it really likes to form double tops and double bottoms. So if I just show you here, you can see it was a point C is a double bottom with respect to the March of 2020 lows, and then we had a nice double bottom around here, and then what it has done is gone a little bit above. It still remains a double top formation in my books. So essentially what the Amazon stock has done since 2023 is tested the bottom of its trading range, and it has gone and tested the top of its trading range. So here back in 2020, when it was forming these highs around here, this is where Jeff Bezos was still the CEO. Now I believe he's the chairman. He's no longer the CEO. So the new CEO has come in and has done a pretty good job of actually trying to take the Amazon to new highs, which it managed to do by slight margin here. But tough job now. And of course, Jeff Bezos is Amazon, and long-term investors did believe in Amazon. With the new guy coming in, I think it's a pretty challenging job for him in these kind of economic circumstances to lead a mature company. So it will be really interesting to see how Amazon's stock price will trade now. But a 50% retracement of the entire CD leg is kind of normal in my opinion. Now with that, let's take a look at Shopify. This is also like a shopping cart. They provide a website which you can use for your stores and stuff like that. And here, not a nice looking price action, to be honest. I was actually at one point anticipating it might be strong enough to hit $100, but it hasn't been able to do that. And this one has a potential for ABCD, but this whole thing looks pretty corrective to me. There are several, look at the bearish candles around here. So yeah, with the fourth quarter in retail, which usually is the best time of the year for retailers, is coming up, we might see some good price action in here. But moving above $100 per share level, I think it's going to be pretty challenging for this stock now. Now let's take a look at Zscaler. Wow, so the Zscaler is a pretty scary stock. Look at the earnings came out and what a dump it got. Now the stock is doing a lot of is a very volatile stock. So we do have these patterns around here, but I'm getting skeptical now of these patterns because of the bearish moves that we are seeing in the stock. So we have this point C here, but I'm gonna take off this big one off the table. I think it's got a lot of challenges to overcome, and I think in their earnings call they mentioned they have actually got a new sales team as well. So in the security space. That kind of reminds me of there used to be a stock called FireEye, which I used to follow, and then it became Mandiant, and then a private equity, I think it was Blackstone, they bought it, and they even sold the FireEye name because I don't know, they didn't even want that. So yeah, so there's like a new sales team, and in the FireEye case, the CEO, he actually left, so that's never really a good sign. And at one time in the cybersecurity space, the FireEye was touted as having the best technology, but the stock was reflecting something else. And Zscaler is kind of in the cybersecurity space as well, and you can find it in a lot of if you're working for big organizations, they'll have Zscaler installed, and they're kind of monitoring when the employees are working from home or what they are browsing and stuff, and they're recording these things. They're trying to make sure whatever you're browsing is safe and stuff like that. But it looks like it's in that space there are a lot of other competitors as well. And with the return to back to the office, I don't know how much of sales they can generate. So these are some of fundamental levels that might be impacting the stock price. But from a technical perspective, this channel this is what it is moving in, and it's just not able to have a sustained break of it. It's still really hanging around this point C, but with this kind of a bearish candle, the chances are it's going to break below that and move towards the bottom of this channel. So even this blue CD might not even come to fruition, and what it could leave us to is a really scary scenario where it could be in a big ABCD to the downside. But of course, it's not going to be a full ABCD because that'll take the stock below zero, which is not going to happen. So I think this stock is going to remain under pressure, and what it is most likely doing is coming back and filling this gap in around this 90 91 or $90 area. So most likely this is where the stock is now moving, and there's a potential for a smaller ABCD like this. Here we go. Which is gonna see the stock move towards the upper boundary of this gap. So most likely it could come somewhere in the middle of it, fill it in, gap completion. I'm leaving this CD for now, pattern, but I don't have much faith in this because of the look. In just 1 week it took out the work of 1, 2, 3, 4 weeks. 1, 2, 3 weeks, and the 1, 2, 3, 4 weeks when it just made a recovery high. So that's bearish in my book. So look, we have had something similar like this here. The market did try to recoup a little bit here, but you could tell these were not good looking candles, the bullish candles, because there was a if you just look at the entire body of the candle, half of it is just the wick. So not a good sign. And then the follow through was of course bearish, and this market just kept on moving lower. So we could see a repeat of that, completion of this ABCD filling the gap. So the chances are we might not be able to get this pattern filled. So Zscaler, a disappointment, and we look at the price action and then reevaluate our analysis. But I think we are actually moving lower in Zscaler, unfortunately. Roblox. Let's take a look at Roblox. So we like to watch Roblox because it's one of the stocks which is really close to the theme of metaverse. So Mark Zuckerberg, he was at one point, he even changed the name of his company from Facebook to Meta for a metaverse. And then he was spending a lot of money building what he visualizes is gonna be the kind of the future. And then investors were like, okay, we're not really sure, in your vision, what you're expecting, how quickly we will be able to build that, what sort of follow through will take place, and how the money will be recovered of all those investments coming in. So he made a pivot. He made a pivot into artificial intelligence, and the kind of data which Meta, the formerly Facebook, holds is, of course, is going to be a fantastic organization for artificial intelligence related work. So there we go. The stock just skyrocketed from 78.6% retracement to new all-time highs. And this one, Roblox became a public company through a SPAC. So I believe a lot of insiders who actually were holding a lot of shares. They just wanted a way out to monetize, and that is typically what happens in IPO cycles. But SPACs are a little bit different, and we have seen a move lower around here, and it's just gone into a long consolidation, and it's just some of the other stocks have pulled back quite a lot. This one has not, because it's already down a lot. So the chances are we could actually see about $53 per share level, possibly even 38.2% return. That is our ultimate target. So it might take quite a while for the stock to do that, but I think ultimately it'll be able to reach here. The momentum is improving, or is trying to improve. Now we have the 20-week moving average, which is blue line, slightly above the 89 period moving average, so that's good. So I think slowly but surely it's building up kind of the strength and momentum, and then it's already very close to the 47, which is going to be the structural resistance here. A little bit higher is 53, which is structural resistance here. Then ultimately is 38.2% retracement. So this is what we are watching in the tech stocks. Thank you very much for watching the video, and if you found this video of educational value, you learned something, you enjoyed watching it, give it a thumbs up. And if you like our technical analysis, then please do subscribe to the channel, and if you do, then hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. So thank you again for watching the video. Good luck, good trading, and speak to you guys soon.